And joining us right now is Liz Everett Krisberg. She's the head of the Bank of America Institute. Again, Liz, this is based on how many million? Tens of millions?
60? 70 million.
68, I was going to say. Okay, so almost 70 million accounts that you're watching. This is real information. We've been at a disadvantage not getting information from the government on some of these things. Let's talk about what's different. And I think the first thing is that consumer spending slowed down.
So consumer spending is still growing, but that pace slowed. If we want to use kind of a winter theme, what I'd say is it cooled, but we are not frosty yet. It is still up 1.3%. That being said, if we look at it seasonally adjusted month over month, it was flat in November, which was the first time it didn't grow in 5 months. So there is something going on here. What I think is important to also recognize is that that's the aggregate number. There are differences between how different income cohorts are behaving.
To this point, it's been the high-income consumer that's really been powering the economy. Are they starting to slow down a little bit?
They slowed down a little bit by 1/10, but really they continue to be powering it. And what we're seeing is that the difference in the higher-income consumer, they grew spending growth 2.6%, lower income 0.6%. So you are still seeing evidence in our spending data of what people are calling the K-shaped economy. There is a divergence there. Interestingly, the other thing that was different is the group that actually pulled back the most was the middle income consumer. We don't talk about them as much, but they went from up 1.7 to up only 1.4. So that was a little bit more of a pullback.
You've talked about wage growth and how the upper stratas have outpaced the wage growth of the lower income stratas. What did you see this past month?
That we're seeing that same kind of trend, that we'll call it a K-shape again, continue. On the higher income wage growth, their wages were up 4% in November. That's the highest level of growth we've seen in 4 years. Lower income households also increased, went from 1 to 1.4, so they also improved. But that difference, 2.6 percentage point difference, continues to be relatively significant. The only thing I would say is the K-shape may not be the right way to describe the labor market, only because a K-shape implies, one side going up, which we are seeing in the higher income. But what we're seeing in the lower income isn't that it's declining, it's actually stabilizing. It had come down fairly significantly starting in the summer, but it seems to have stabilized a little bit here.
So it's like an alligator mouth open.
I was trying to figure out what it was. I think we're going to now call this the alligator mouth economy. That's what we're going to call it.
That's a mouthful. What can we dig into aside from wages? Can you tell us about the labor market?
Absolutely.
In terms of, are people losing their jobs? Are we in a danger zone when we've got this Fed decision today. Should they be cutting rates because the labor market's in trouble?
So we obviously don't have the official payrolls number yet. They will not have that yet. But what we do have is what we're seeing in the Bank of America data. And from a payrolls perspective, we can look at the number of accounts that are getting a paycheck. And what we saw in November was we saw that increase by 0.2%. So the labor market is expanding.
Okay.
Now, that pace is a little bit slower than it was in September and October. Then it was up 0.5, but it is still expanding. And then the other side of the coin is looking at the number of people getting paychecks, what's going on in unemployment. Because many states are providing unemployment.
I was going to say, can you differentiate between somebody getting a paycheck from an employer and somebody getting a paycheck
from... Yes, we can. Yes, and we can see. Now, again, it's only about 2/3, 3/4 of the states do this, so it's not every state. But what we see there, the trend, the pattern is relatively consistent to what we saw in September and October in terms of the number of new households getting unemployment. So I think what you take those two things together, the takeaway is we are really in the low hire, low fire environment in terms of the labor market, but it is still expanding. And again, go back to what we were talking about with the wages. Wages for higher income are continuing to accelerate, and we've got the alligator mouth. They're stabilizing for the lower income.
So you're not a Fed governor, but maybe I'll make you one for kicks right now.
Yeah.
If you're looking at your best guess of where the labor market is and where inflation is, with all of the data you have at your fingertips, the dual mandate, how do you satisfy it? What would you do?
So let me talk a little bit about inflation, because we haven't touched on that. One of the things that's interesting when we look at our spending is we can understand, is the spending growth just going up because prices are going up? And when we looked specifically at holiday spending items this month, what we saw is that the growth in holiday spending, the growth in these items, wasn't just because prices were going up. Transactions were actually going up too. Yeah. So more transactions is driving that, which leads me to believe, in that
Inflation's
area,
not that hot.
That inflation is not accelerating, right?
Okay.
So you've got that. Obviously, I'd want to see more data than just that. But I think what you're seeing is inflation is is getting more under control. Labor market, as I said, is expanding, not as fast as it was, but those are the things I'd be thinking about.